Happy New Year! Hi, my name is Pieris Markou, and on behalf of the Cyprus Tax Webcast team, we would like to wish you all a very happy and prosperous 2016. We will start the new year with our quarterly tax update covering the period from 1 October to 31 December 2015, brought to you by the Deloitte Cyprus tax team right here from the Dot Lounge of our Nicosia offices. The main aim of our quarterly tax updates is to give you some high-level insights to major tax developments in Cyprus and brief updates on developments around the world that may have an impact on companies operating from Cyprus. In today's webcast, we will look at changes in local tax legislation that were voted and published into law during the quarter ending 31 December 2015. We will update you on the new tax treaties that have come into effect and on the protocol signed during the period, and briefly cover some important international tax developments. We will close off with a quick reminder of the tax deadlines coming up in the next quarter. We will start with the local tax developments, that is, changes in the tax legislation that have been enacted during the period from 1 October to 31 December 2015. During this last quarter, we had some important changes in the tax legislation that were eagerly awaited and which are designed to make Cyprus more attractive to the international investor. At the same time, changes were enacted in the laws affecting loan restructuring, which improves certain changes already made back in April 2015. We will close off the local developments with some important circulars and announcements issued by the Ministry of Finance. We will start off by looking at the tax law amendments during the quarter. On 10 of December 2015, the House of Representatives voted into law a number of expected tax law amendments that were published in the Government Gazette on the 17th of December 2015. The key amendments were made to the income tax law and the capital gains tax law. The amendments mainly aim to improve Cyprus's competitiveness in attracting foreign investments, harmonize the Cyprus tax laws with the European Union legislation, address the tax treatment of activities relating to the oil and gas industry taking place offshore Cyprus. They deal with practical issues and inconsistencies of the existing laws and introduce a number of anti-avoidance measures. We will start off by looking at the changes made to the income tax law. According to the amended income tax law, any realized or unrealized foreign exchange differences, gain or losses, will be tax neutral, except for gains or losses arising from trading in Forex. That is, foreign exchange gains will not be taxable and foreign exchange losses will not be tax deductible, with the exception of foreign exchange gains or losses arising from Forex trading. For persons trading in Forex, the law introduces an option to make any revocable election to be subject to tax only on realized foreign exchange differences. The effective date of this amendment is 1 January 2015. Important changes were made to the employment income tax exemptions. First, let's look at the 20% income tax exemption. According to the amending law, the exemption period for the 20% income tax exemption is extended from 3 years to 5 years, provided the employment started during or after 2012. This exemption applies for tax years up to 2020, and it is then abolished. An important change was made to the 50% income tax exemption. The exemption period for the 50% income tax exemption is now extended from 5 years to 10 years. However, an individual commencing employment from 1 January 2015, in order to be eligible to claim the 50% tax exemption, he or she should not have been a Cyprus tax resident for at least 3 out of the last 5 years immediately prior to the year of commencement of employment, and he or she should not have been a Cyprus tax resident in the tax year immediately prior to the year of commencement of employment. The effective date of both of the above provisions is from 1 January 2015. we had an important change to the transfer pricing provisions. Prior to the amending law, the income tax law provided only for upward transfer pricing adjustments to taxable profits in case where transactions between related parties were not considered to be at arm's length. Following the amendment, where the commissioner proceeds with an upward adjustment to the taxable profit, then the other party involved in the transaction will be eligible for a corresponding downward transfer pricing adjustment. The tax treatment of the downward transfer pricing adjustment will be subject to the provisions of the income tax law. The effective date of this amendment is from 1 January 2015. We have changes to the group relief of taxable losses. Prior to the amending law, only a Cyprus tax resident company could surrender losses to another Cyprus tax resident company. Following the amendment, losses may be surrendered to a Cyprus tax resident company by a company tax resident in another member state of the European Union, provided that such company has exhausted all the possibilities of carrying forward or surrendering its losses in its resident state or in another member state where an intermediary holding company is based. Another important change is whereby in establishing whether two Cyprus tax resident companies are eligible for group relief, the interposition of a non-Cyprus tax resident company will not affect their group relief eligibility as long as the interimposed non-Cyprus tax resident company is a tax resident of another European Union country or in any other country with which Cyprus has signed either a bilateral or a multilateral tax treaty or an exchange of information agreement. The effective date of this amendment is 1 January 2015. Taxation of dividends from hybrid instruments. Prior to the amendment, dividend income was unconditionally exempt from income tax. Following the amendment, where a Cyprus tax resident company or a permanent establishment situated in Cyprus of a non-Cyprus resident company receives dividend income, the income tax exemption shall not apply to the extent that such dividends are tax deductible from the taxable income of the dividend-paying company. Dividends that do not qualify for the income tax exemption are not considered as dividends for special defense contribution purposes. The effective date of this amendment is 1 January 2016. We have changes to the intellectual property regime. Under the IP regime, only 20% of the net profits from the exploitation or disposal of qualifying intangibles is taxable. The net profit is calculated after deducting from the license income or gains from disposal all direct expenses associated to the production of the income. According to the amendment, in cases of taxable loss, only 20% of such loss will be eligible to be surrendered via group relief or carried forward to subsequent years. It is further clarified that any corresponding downward transfer pricing adjustment that may arise from applying the revised arm's length provisions of the income tax law and any notional interest deduction attributable to qualifying intellectual property will be deemed as a direct expense for the purpose of calculating the taxable profit or loss. The effective date of the above provision is from 1 January 2012. The income tax law has been amended so that the definition of the term republic is more explicitly defined, indirectly clarifying that activities taking place offshore Cyprus fall within the scope of the income tax law. We also have an extension of the definition of the permanent establishment, which has been extended to clarify Cyprus's right to tax any extraction, exploration, or exploitation activities that are carried out offshore of Cyprus. The effective date of both amendments is 1 January 2015. We have an amendment to the income tax law introducing a 5% withholding tax on income from oil and gas related services. In accordance with the new law, a 5% withholding tax will be applied in the cases where services are performed in the oil and gas industry which are not captured by the permanent establishment clause. The effective date of this amendment is 1 January 2016. Finally, we have a number of other amendments. The personal income tax deduction for contributions to approved pension and/or medical schemes is now provided without the need for the issue of regulations. There is an extension to the accelerated capital allowances for purchases made during 2015 and 2016. The claim to unilateral tax credit relief for underlying tax credits on dividend income paid by a company resident in another EU member state will not be available in case where such dividend is considered a hybrid. Certain anti-avoidance provisions have been introduced for reorganizations, and the Commissioner has now the ability to charge a fee for the issuance of tax residency certificates and tax rulings. Let's now have a look at the changes made to the capital gains tax law. Prior to the amendments, capital gains was levied on capital gains derived from the disposal of immovable property situated in Cyprus and the disposal of shares of companies which directly own immovable property in Cyprus. Following the amendment, capital gains is now imposed on sale of shares which directly or indirectly participate in other companies which hold immovable property in Cyprus, provided that at least 50% of the market value of the shares sold is derived from immovable property situated in Cyprus. In calculating whether the value of the movable property represents at least 50% of the market value of the shares sold, any liabilities would be ignored. Property gains that are exempt from income tax will now be subject to capital gains tax. According to the amendment, gains from the disposal of property, as defined in the revised capital gains tax law, that are exempt from income tax will now be subject to capital gains tax. In determining the disposal proceeds, upon the disposal of shares of a company which directly or indirectly holds immovable property in Cyprus, the disposal proceeds are calculated based on the market value of the immovable property held directly or indirectly by the company in which the shares are sold. In case of a disposal between related parties, where the declared disposal proceeds are lower than the market value of the property, the disposal proceeds will be deemed to be the market value of the movable property on the disposal date as determined by the Commissioner. The effective date of the capital gains tax law amendments are from 17 December 2015. Let's look at briefly some of the changes to the property loan restructuring. On the 16th of December 2015, the House of Representatives voted into law amendments in the following tax laws exempting loan restructurings from taxes. Basically, the definition of a qualifying restructuring has been amended to ensure the non-taxability of any transfers of immovable property forming part of a loan restructuring agreement. The laws that have been affected are the income tax law, the capital gains tax law, the special defense contribution law, the stamp duty law, the VAT law, the collection of taxes law, and the Department of Land and Surveys law. The amendments are effective from 31 December 2015, the date of their publication in the official government gazette. On the public interest rate charge for amounts due to the tax office or from the tax office, the rate of interest for late payment of tax for 2016 will remain the same at 4%. This was announced on the 23rd of December 2015 and will be effective during the whole of 2016. An important circular was issued by the Commissioner of Taxation at the end of October, which aims at regulating the process for issuing tax residency certificates. The main aim of the authorities is to strengthen their claim on residency by requesting and obtaining more details as to the way a company is managed and controlled. Let's look at the details. Prior to the circular, the tax residency certificates issued relied on the tax returns and the confirmations received from the directors. Following the circular, a detailed questionnaire must now be completed covering, amongst others, the following: the composition of the board, the place where board meetings take place and where minutes are kept, who exercises control over key management and commercial decisions, where do shareholders' meetings take place, whether or not there is the existence of power of attorneys and whether they are general or specific, where books and records are kept and where the company seal is kept. Depending on the responses, the tax authorities will determine whether a residency certificate can be issued. Another important announcement is that of the Ministry of Finance in connection with the intellectual property regime of Cyprus. The Ministry of Finance announced on the 30th of December 2015 the upcoming amendment to the intellectual property tax regime. The said amendment will incorporate the recommendations of BEPS Action 5 as well as the conclusions of the ECOFIN Council adopted on December 8, 2015. The approach of Action 5, which is the nexus approach, requires the existence of material activity which includes the clear interconnection between the rights which create the income and the activity which contributes to that income. The intention of the Cyprus tax authorities is to proceed with the amendment to the intellectual property tax regime in order for it to be aligned with the parameters of Action 5, but at the same time to provide for the maximum transitional arrangements that can be included within the revised framework. During the quarter October to December 2015, we had the signing of a protocol with Ukraine and the ratification of a number of treaties signed during 2015. In addition, the treaty negotiating team at the Ministry of Finance has been very busy continuing the momentum of the negotiations with the new treaty partners. Let's have a look at some details. On the 11th of December 2015, Cyprus and Ukraine signed a protocol amending the existing tax treaty currently in place between the two countries. The agreed protocol will come into effect not earlier than 1 January 2019. What is important about the protocol is that a most favored nation clause has been adopted for taxes on interest, dividends, royalties, and capital gains, ensuring that in case Ukraine signs a treaty with more favorable terms than those adopted in the Cyprus-Ukraine tax treaty, those new rates will apply. Let's now have a look at the treaties that come into effect from 1 January 2016. These are the treaties with Switzerland, Guernsey, Georgia, and Bahrain. For the international part of this quarter, I will briefly cover the BEPS announcement of October 2015 and cover some developments within the European Union. We will close off the international part with a brief outline on the reporting requirements for CRS, that is the Common Reporting Standard, which has come into effect from 1 January 2016. On the 5th of October 2015, the OECD published its 13 final reports on the BEPS action plan. The 15 actions that have been addressed in these reports provide tools to the governments to tackle base erosion profit shifting, ensure that profits are taxed where the economic activities generating the profits are performed and where value is created. The final reports recommend changes to domestic laws, to the OECD Model Tax Convention, and to transfer pricing guidelines. The first actions to take effect will relate to the new transfer pricing approach, the country-by-country reporting, and the BEPS compliant IP regimes. Furthermore, the multilateral instrument intended to allow the effective modification of bilateral tax treaties is expected to be negotiated and agreed. For the latest updates on BEPS project, please visit www.beps.tax, which is the Deloitte Central BEPS website. The European Commission continues its investigations on tax rulings. Let's have a look at one case. In December 2015, the European Commission launched a formal investigation into Luxembourg's tax treatment of McDonald's. Its preliminary view is that the tax rulings granted to the company may have afforded it advantageous tax treatment in breach of European Union state aid rules. The Commission said that on the basis of the two tax rulings given by the Luxembourg authorities, McDonald's Europe franchising has paid no corporate tax in Luxembourg in the years since. The latest Commission investigation comes 2 months after it ordered Luxembourg to recover up to 30 million from Fiat Chrysler and the Dutch authorities to do the same for Starbucks because their tax deals were seen as unlawful aid. Finally, on the international part, an update on CRS. The Common Reporting Standard is an information standard for the automatic exchange of information developed by the OECD. The legal basis for the exchange of data is the Convention on Mutual Administrative Assistance in Tax Matters that Cyprus signed on the 29th of October 2014 and published in the Gazette on the 18th of December 2015. The CRS will be effective from 1 January 2016 for more than 50 early adopter countries, including Cyprus. In this respect, a relevant decree was issued by the Ministry of Finance on 31 of December 2015. CRS calls on governments to obtain certain information from their financial institutions and automatically exchange it with other jurisdictions on an annual basis. Financial information to be exchanged includes interest, dividends, account balances, income from certain insurance products, and sale proceeds from financial assets. We will close off with the dates to watch out for during the next quarter ending 31 March 2016. 31 January provides for the submission deadline for the deemed dividend distribution declaration IR 623 for the tax year 2013. 31 of March 2016 is the deadline for the electronic submission of the 2014 income tax returns, both for individuals and companies preparing audited financial statements, and the submission of the return and payment of the first installment of the special tax levy by credit institutions for 2016. This concludes our webcast for today. If you have any comments or queries on the items discussed during this webcast, please email us on cyprustaxwebcasts@deloitte.com. Thank you.